Hello, it's Robert Miner with Dynamic Traders Group with this week's DT trade strategies for the week beginning May 31st, 2021, where we take a 5 or 10 minute video, shortened video from compared to what we do for our DT Report subscribers, but hopefully alert you to one or two markets with potential trade setups or reversals coming up in the following week. I hope last week, if you viewed last week's video, use that information. Gold and silver have not yet given their reversal signals, but they're in the same position they were last week and with the same type of reversal signals. So again, what you learn from these videos, I want you to apply to other markets at other time frames, and we don't always get that reversal signal right away, but if you keep following the market, you can identify when that reversal has been made. So gold and silver, same position they were a week ago. Just wait for that trigger, and I suspect it's going to come this week. If you're interested in keeping up to date on these markets every day, check out our DT reports. Bitcoin followed the scenario perfectly last week. I think we've identified the probable what's going to be a multi-week low coming up here pretty soon, both the price target for that as well as the time target for that. Again, that's for our subscribers in our DT reports. Check it out if those are the markets that you want to keep up on every day. Let's take a look beginning today with one of my favorites, the S&P. In this immediate advance with the SPX, last Tuesday, it had reached a point to complete an ABC correction. Obviously, it didn't do that. It didn't make its reversal signal, but it was in a position, notice my language, in a position to have completed an ABC. It just never made the reversal and the reversal confirmation signal. Nothing's changed in that we're in a position to complete a daily high. A daily high is a high that lasts for at least 3 to 5 days. In other words, there's a correction against the trend for 3 to 5 days, and it depends on the higher time frame trend on whether it's going to be more than a daily high. There's two reasons to suspect it's more than a daily high. Number one, the weekly momentums are bearish, they're not oversold. And number two, we have an almost textbook ABC correction up. So before I go to the intraday data to teach you something about some short-term patterns, is if the SPX closed below the closing high of what I got labeled as a wave A, that closing high, that will be a closing overlap, and it will indicate that this advance is a correction, not part of an impulsive bull trend. If it's a correction, what follows a correction? Keep it simple. Keep it really simple. If the market's making a correction when the correction is complete, the trend prior to the correction should continue to a new extreme. If the SPX is making a ABC corrective rally, and it would indicate that that's the case if it closes below 41.7385, more than likely if it makes that close, it will eventually continue to decline to test or exceed the May low. So that's quite a ways below where the market is. Depends on your trading time frame, of course. If you're a long-term trader or so-called investor, yeah, it's kind of irrelevant to you. But if you're a shorter-term trader, you make trades that typically last a few days, maybe a week or two, it would be very relevant to you if we had a decline that were to exceed the May low. So with that said, and knowing that, by the way, our daily momentums have been, do a look back, overbought. I think Friday was day 4. Typically, by the 4th day, we make a price reversal. So let's take a look at, let's go down to some shorter term time frame because it gets really interesting. This is the SPX. It's 15-minute data. It shows the same in 60-minute data and all, but and frankly, I usually don't go down as short as 15 minutes, but it's a good illustration. And I always default to the cash index if I want to clarify what the pattern position is, because the overnight trading is low volume. Sometimes there's a lot of volatility that's not relevant to the trend or the pattern, but I check them both. But I will defer to the cash if it seems to be clearly positioned in the cash. Here we are coming up from the May 19th low, and boy, this is almost a textbook 5-wave advance with what we call an ending diagonal. So a 5-wave advance coming up into the May 21st high, correction, another little 5-wave advance to a new high, correction, and now we have, and by the way, what I got labeled as a wave 3 is 61.7 points. It's only about half of what the wave 1 was. But then if this indeed is an ending 5th wave diagonal, and if we completed it on Friday, then wave 5 is less than 3, so 3 is not the lesser of 1, 3, or 5, and that's what's important. And this is really important here. This potential 5-wave ending diagonal is when you have overlaps. You do have 5 sections just like in a normal impulsive trend, but the wave 4 overlaps with the wave 1. Typically you only find that as the last section of a trend or counter trend. So in other words, it can be the wave 5 of the breakdown. In this case, wave 5 of wave C, wave 5 of wave C of wave 2 or B. Potentially, big question mark there. The beauty of this also is, for a trade setup, is just to trade below Thursday's low, that would be the wave 4 or 5 low, would complete the pattern. So not only complete the pattern up the last 3 days, but complete the pattern up from, the 5-wave pattern up from the May 19th low. So that's pretty critical. Because that has the potential of completing that higher time frame ABC correction. And if that's the case, boy, this would be a really early signal on the short side with a really small capital exposure. You wouldn't, we trade below Thursday's low for a setup on go short. And where's the stop? Well, you don't have to have it any further than Friday's high. And that's a small distance compared to the distance on the potential distance on the downside. Significant reward, minimal risk. So think about that early next week, about that potential setup. I'm not saying it's going to happen. It's not a forecast. I'm not saying that the S&P isn't going to just shoot up. Some news could come up over the weekend or whatever, and it could continue the bull trend in an accelerated manner, and then something else is going on. What I do is I make decisions based on what I know, and I know that the daily momentums are dual look back overbought 4 days. Usually by the 4th day, we get a price reversal. Usually, not all the time, but we do know it's near the extreme to complete a price reversal. What I do know is the weekly momentums are bearish, and that just represents the loss in momentum on a weekly basis. It represents basically the S&P's been sideways for several weeks after having a fairly strong bull trend. So that's what that represents. It's losing its momentum, losing its buying power. What I do know is if we look at the daily data, we are in a position, an almost ideal position, for an ABC correction. That's what I know. And what I do know is coming up from what I got labeled a wave below is potentially an almost ideal 5-wave advance. And potentially Friday completed that advance. And I do know that we can have a trade strategy, a specific trade strategy with minimal capital exposure for the potential of a decline to a new low. May not happen, but I have the parameters set. In other words, come Tuesday, there's no trading on Monday and the U.S. exchanges are closed. It's a holiday. Come Tuesday, I don't have to think. And that's how it ought to be, is that you set up, you understand the position of the market basis, whatever technical analysis you use or pattern strategy you use and all of that, you understand where the market is based on how you view the market technically. And when it all comes together, you can then develop a specific trade plan that is simply executed if such and such happens. That's what we're looking at this Monday for not just the S&P, but of course all of the stock indexes, at least the ones we follow, the U.S. indexes, are in substantially the same position. Certainly different relative strengths. Some are a little bit stronger, some are a little bit weaker. They're all in a position, though, if you do some simple price retracements and pattern analysis, to complete an ABC correction. So we'll see if that happens. And it'll be very significant if they close below this closing high from May 14th. That will be very significant in that then they've probably completed a weekly high and will continue to below the May low. Well, if you want to keep up on the stock indexes or Bitcoin or gold, silver, or the euro, or all these markets on a daily basis, where we update all of the charts, all the commentary every day, check out our DT reports. Take care. If you're in the U.S., have a fantastic 3-day holiday. If you're not, still have a fantastic 3-day holiday. Stay safe, stay healthy. Be back with you next week. Take care.